Hello folks, and welcome back to another edition of the Crypto Byte. Today we're going to talk about what we think is going to happen in the crypto market as well as global markets over the next 3 to 6 months and some actionable trade insights that we're taking on our behalf. We hope you enjoy. So Monte, from a very broad overview, any ideas generally about what you plan to do in the next 3 to 6 months? What are you planning?
Well, in trading and specifically in crypto, there tends to be a long-only bias. People want to trade to the upside. They don't want to make money to the downside. But really, there is volatility in both directions, and there is money to be made in both ways. So, although there is a long bias in a lot of traders, I would encourage you to start thinking about making money to the downside, because that is what I'm looking at here over the next 1 to 3 months. And that's what I want to talk about today, is some very short positions that I think are going to be some really nice profitable positions over the next 1 to 3 months. And that's even with Bitcoin underperforming relative to the traditional equity market. So that's just how I'm positioned generally. Excited to dive into some more positions, and I'm curious to hear what you're doing over the next 1 to 3 months as well.
Yeah, I like that you mentioned the idea of like the long bias, because you'll see this in equity markets. You'll also see this especially in crypto, because the vast majority of retail exchanges that folks will use for their first time, whether it be Coinbase, Robinhood, they're long only market structures. So people even have this subconscious bias where it's like, I can't make money unless price goes up. And so I think the reality of the crypto market is that a lot of VCs, a lot of prominent individuals, came in during the cycle and advocated for the idea that this was going to be the last Bitcoin cycle. We're not going to have a bear market like 2018. We're not going to follow that cycle theory. But now I think that we're actually starting to see it, especially when majority of altcoins are down 70-80% from their highs, and the equity market is in other turmoil, which leads us to the second aspect of the fundamental case, which I think is not only just centered around crypto, but also about the Fed and equity markets. So my opinion, you want to own volatile assets or high growth assets when the Fed is engaging in quantitative easing, basically like they did all throughout 2020 and 2021. However, we're now in kind of a new regime where folks of the everyday have very difficulties getting by, doing things like purchasing gas without inflated prices. Inflation is hurt many, and so the Fed is very serious about quantitative tightening, bringing down inflation, and as a result, that's leading to a strengthening dollar as well as depreciating asset values in the stock market and in risk-off behavior or risk-off assets. So you want to sell when we're in that type of environment. So if we are in that type of environment, what specific assets are you selling?
I'm selling the most high risk, high beta assets, ones that are, still highly inflated, have outperformed Bitcoin to the upside. I think you can use that as a good gauge of which assets will outperform to the downside as well. And there are a lot of assets on that list. But before we get into those, I think, we should take a look back at some history of crypto bear markets, because for a lot of people I know, this is their first time in a crypto bear market. A lot of people joined in the last year. Price was only going up for a while, and then, for the last 4 to 5 months, it's only been down. This is not the first time we've seen that sort of price action. And one thing I'll say, right off the bat is, no matter how much you like a token from a fundamental perspective, and no matter how much you like the team involved and anything about the token, you do not want to hold an asset through a bear market. That is just what crypto has told us time and time again. So one example I want to point to here quickly is Ethereum, because for me, this is one of my favorite assets in the space. I think it is, a blue chip crypto asset. I think it has tremendous utility and will be around for a while. And I felt that same way in 2017 and 2018. That being said, I knew it was time to get out of my ETH position, and I wasn't willing to hold it through a bear market. And if you look at, the heights that ETH reached during the peak of that 2017 retail mania, it got up to almost $1,500 before correcting to less than $100, trading at around $90. So that is a significant correction from an asset that has strong fundamentals, strong utility, and a very solid team with a cult following as well. So all of those things were not able to save Ethereum during a bear market. And you're looking at a lot of assets that have seen incredible speculation in 2021, have weaker fundamentals than Ethereum, and are set for I think, an even sharper correction. And that goes for assets that I like, things like Solana, things like AVAX. I very much like them from a fundamental perspective, but if we are heading into a bear market, history tells us that you do not want to be holding these things because they can continue to retrace from their all-time highs. And there's good reason for that I actually want to go into a little bit, that being the VC vesting schedules, the supply schedules of a lot of these tokens, and the initial token distribution as well. So for the time being, getting out of these assets, even though I like them a lot fundamentally, and just looking to play the downside for the time being. How about you, CJ? How are you positioned in the interim here?
Pretty similar to you, but I just want to recap that point that you made about Ethereum, where in 2018 it went down roughly 90 to 95% from $1,400 to $80, while the S&P 500 continued to make all-time highs. So when you imagine the risk-off behavior or environment we're going into with the stock market, I mean, that's a whole nother thing with ETH, and especially for these other type of altcoins. But the thing that I think is really interesting, and we're going to get into this quite a bit once we discuss like the supply schedules of a lot of these altcoins. But first, you wanted to talk about Bitcoin dominance and how that ultimately plays out into a bear market and how altcoins kind of behave as a result. So you want to talk about that before we get into specific assets?
Yeah, absolutely. And that kind of goes along with everything that we've been talking about so far, kind of how you want to be out of the high risk assets right now and into the more kind of safe haven, lower beta assets. And even though Bitcoin is still a highly speculative asset, and that's evident from the price action, in the crypto space, it is the least volatile and the most secure in terms of future speculation. So looking at Bitcoin dominance, which is essentially just the total percent of the crypto market cap that's comprised of Bitcoin at any given time, gives us a great indication of kind of the risk tolerance of speculative investors. And one thing that is happening, and that's been happening over the last couple of weeks, is we're seeing a flight to Bitcoin. So even though Bitcoin's sliding down, it's underperforming relative to the NASDAQ and the S&P, we're still seeing it outperform other crypto assets. That is the hallmark of the start of a bear market. So now that we're seeing Bitcoin dominance climb up to about 47%, approaching this breakout level of 47.5%, this really could mark the start of a continuation of this alt bleed out. And for me, we don't really have all that much relief until we get up to about this 60% threshold. If we look at the weekly chart, I mean, you can see that other bear markets have led to similar flights to Bitcoin. And that doesn't mean that Bitcoin is going to go up in price. Bitcoin could still feasibly continue to go down, break below that 25K level, and Bitcoin dominance still goes up because those alts just bleed out a lot harder and faster than Bitcoin. So for the time being, it makes sense to be moving out of Bitcoin, or moving out of the alts, moving into Bitcoin, into the stables. And that's what we're seeing from Bitcoin dominance as well. So we could be in for an extended period of altcoin correction, and there is some evidence to back that up, being the supply schedule data, some of the initial token distribution, and also some of that VC participation that has been very, very heavy in the last year. So what do you say we move on to that?
Well, let's hit the ETH BTC chart before we move on, because it looks pretty much like the inverse of Bitcoin dominance. In Bitcoin dominance, I think you got a little bit of like Wyckoff accumulation schematic forming, whereas you have like a Bart Simpson pattern that looks very bearish, and it looks like classic just distribution at the top there. So I think ETH Bitcoin, that order pair has to come down. It looks like it is technically, and the fundamentals do support the fact that it would go down as well. And that goes into like the capital flows model, where basically when we're going into an increasing risk on environment where Bitcoin, maybe it's making new all-time highs, that's when the trades like the Manas and the Dogecoins come onto the table. But you didn't need to buy Dogecoin at the bottom when Bitcoin was bottoming. Bitcoin actually went up first to 20,000 before any of those trades were on the table. So I wouldn't be surprised if we see a Bitcoin-led rally to kind of get us out of these like risk-off kind of environments.
Yeah, that's exactly what we've seen historically, and I'm glad that you mentioned this ETH BTC chart, because you and I were joking the other day that 2021 kind of feels like, with the price action of the last few weeks, that it was all just sort of a beautiful dream in crypto, and that it actually didn't happen. And looking at this ETH BTC chart right here, I mean, I think this is a great example of it. We saw the emergence of a ton of layer ones, lots of money made for some retail traders, mostly for venture capitalists. But look at how we saw this speculation, this outperformance of the alts basically right at the onset of the year. And now it is looking like we could retrace and give all of that back, thus kind of coming full cycle. So, it is looking like we are going to, see a continuation of this negative price action for the altcoins. That's what Bitcoin dominance is telling us. That's what ETH BTC is telling us. And that's what historical price action of, assets like ETH have told us as well. So, all of that is telling us and kind of shaping my short bias right now and leading me to, trade some more assets to the downside.
So now let's get to those assets because, first I'll just say straight up, I don't have any interest in shorting Bitcoin, not because I don't think it won't go down, but because I think there are better options in the market if it does go down. So basically the assets that we've selected and the ones that we are favorable to short have a lot of what I like to call Ponzi-nomics built into their supply schedules. So they have supply schedules that are built in which demand is required to come in a linear fashion. However, basically no market works like that. No market has an inflow of linear demand, especially in an emerging asset class like crypto. Demand comes in exponentially, very short periods of time, whereas 60 to 70% of the other time is like a boring, slow bleed, lull type of environment, pretty much like what we're in now. So with that being said, let's hit some of those assets.
All right.
Why don't we start with GMT, because that's kind of the main one that we're going to hit on today.
Okay, yeah, we'll start with GMT. This is one that, like you said, CJ, Ponzi-nomics is one way that I loosely describe this. And, one thing that we talk a lot about, especially during periods of, favorable price action, is looking at user growth, looking at the number of people actually using the project. Because we can talk about speculation all day, but at the end of the day, people need to be using it. There needs to be demand coming in. And unless there is, price will fall. So one thing that was really interesting that we saw in the tail leg of this bull market was a lot of these assets get inflated without the user growth to justify their price action. And one great example of that was GMT or STEPN. So if you just look at the daily chart of this asset and how it's performed over the last month here, I mean, it is pretty indicative of just an absolute wave of speculation that did not justify the total user growth that it was seeing at any given point in time. And we are, retracing all the way back to where we were when we kind of started the tail end of that bull cycle in March or April. So now that it's coming back down, it does still look like there's a long way to go. Still a lot of outstanding supply that could be sold into this current market, and thus driving this thing down closer to $0. So, when you look at things like user growth and just the amount of users on the network versus the market cap at any given point in time, that'll give you kind of an idea of how much speculation is involved in the price action of an asset. And this one had almost $1 billion, or actually did exceed $1 billion market cap at one point, with no more than 30.
Well, the fully diluted was it still is 10x the actual market cap, which means the supply is going to 10x as well.
Oh, yeah. I mean, I'm not even talking about the fully diluted market cap yet. Just purely from a market cap perspective, it was over $1 billion with less than 35,000 users. That is very tough to justify a $4 price point for your asset. And we're seeing the market kind of come to equilibrium and shake that out. But to your point, CJ, the fully diluted value is still something that needs to be accounted for, and still something that I think is a large reason why this asset will see some negative price action in the coming months.
Let's first talk about what it is. Probably should have started with that. Regardless, STEPN is an app that you can download that is for exercising. Basically, you will buy NFTs within the app. You've downloaded it and actually used it. So you buy these shoes that are essentially NFTs within the app. The app will monitor your exercise habits and will reward you in GMT tokens or various tokens for your activity. But I mean, as you can imagine, as more users come into the ecosystem, more rewards have to be paid out. So ultimately, those newer users who are just coming into the system are basically paying for the users who have been in there and within that ecosystem for quite a long time. So, Ponzi is a very strong word. I don't like to use it lightly, but I think it is somewhat applicable in this case. If the supply and tokenomics are sustained in their current form, if they're not changed. So with that being said, let's take a look at the supply schedule and what Binance Research has specifically with it. But one piece of advice I would definitely have if you're considering on doubling down or buying any altcoin during bearish conditions like this, go on to CoinGecko or to coinmarketcap.com and look at the current circulating supply or the current market cap in relation to the fully diluted valuation. Because if the fully diluted valuation is 5x or 10x as large as the actual market cap, that's a huge red flag that a lot more inflation, a lot more supply is going to be hitting the market. And usually it's because VCs come in, they will buy those projects for virtually pennies of what they ultimately sell for in the retail market. There are vesting periods in which these VCs have locked funds and they cannot sell for. So what they will do is they will go on FTX or KuCoin or various exchanges, hedge their spot buys with short perps, which is basically the position that we've taken. And then they will just continually short as their coins come onto the market, and then they will sell down as well. And VC unlocks began for STEPN in May, just 1 month ago. And ever since, we've seen a lot of decrease in price action. Obviously, that goes for the broader market as well. But STEPN is definitely one that's been hit hard. And if you look at Binance research and the report at which VCs actually purchased these tokens at, they bought about 15% of the circulating supply, or the total supply, I should say, in a private sale, and they paid half a cent for them, for all those tokens, and currently price is around $1. So people will say, look, price is cheap. It's down from $4 to $1, 70, 80% off its all-time highs. Well, these VCs still have lots of tokens to unload, and they still are going to be willing to sell at $1, regardless if price looks cheap. Just because something looks cheap to you in a market doesn't mean it's cheap to everyone else, which is why that's a word of caution before doubling down on any type of these altcoins.
And that's a problem that's not unique to just GMT. There are a lot of alts in the space that are suffering from similar VC unlock issues. And it's not just, Ponzi-nomic coins. There are coins that I like personally from a fundamental perspective that are suffering right now because of these VC unlocks. And I think one great example of that is Avalanche or AVAX. If we just take a look at the funding round of AVAX and the initial token distribution of AVAX, we can get a better idea for exactly how cheap some people got this token and exactly how low it can go because of that. And if we just take a quick look at the seed sale, the staking round number 1 sale, and most importantly the token sale, the date at which these occurred and the amount of AVAX that was sold, you'll see that it's pretty staggering, and these unlocks can have a significant impact and an extended impact on the price action of AVAX. So just taking a look here, let's start with the token sale. This occurred in July of 2020. So almost exactly 2 years ago, not that long ago at all. Price was 52 cents per AVAX. They sold 71.78 million AVAX. So that was, a decent amount of AVAX to be sold. They made $37.58 million. Now, do you have any idea how much that would be worth?
Would you say they bought that at $1 was?
52 cents per AVAX.
I mean, what are we trading at now, like $25?
$25. So that is roughly $1.75 billion of tokens that these VCs bought for 52 cents per AVAX. And what you can do is look at the liquid supply curve of AVAX. This is data provided by Masari, some really good data to look at. And like you said earlier, CJ, one thing that's really important for positive price action in these tokens is demand coming in to at least match or exceed the supply that is being unlocked. And with AVAX, what you'll notice is that we are having a decent amount of unlocks here over the next 3 to 6 months. And a lot of those are coming from the public sale option that I just mentioned, where they paid 52 cents for that 71 million AVAX. So that is roughly $1.75 billion of sell pressure that is going to come onto this market. Some of it already has. And if those people were smart enough to buy at 52 cents, they were likely smart enough to get out a little bit earlier than this. That being said, there are still unlocks occurring every 3 months or every quarter, so every 4 months or so. And as a result, that is translating into intense sell pressure for AVAX. And the same thing can be said for Solana as well. Very comparable unlocks with similar VC participation.
Well, Solana actually did have they had like that narrative of a bullish unlock because they had a majority that were unlocked in a bull market.
Yeah.
But then they were likely sold near or shortly after the top. but that's not going to be the same for things like AVAX and NEAR, which have heavy vesting schedule unlocks occurring during a bearish market condition. So I think what you have to ask yourself if you're trying to be an investor in one of these things is like, okay, if price is going to 1.5x, 2x, or even 3x in the next 1 to 2 years, is demand going to do the same thing to absorb that new supply to even maintain the current valuations?
That's a great point because Solana, this isn't the entire puzzle. This is just a piece of the puzzle. Solana had massive unlocks, but price still went up at an incredible rate because demand was there. Right now, we are in a completely different market environment. The macro conditions are entirely different, and as a result, the demand is just not there, and it's going to be difficult for AVAX to meet, and for things like NEAR to meet the unlocks that we're seeing over the next 3 to 12 months. So that's just something to watch out for. That is a negative source of price action and lots of sell pressure that's going to be hitting the market here over the next 1 to 12 months.
Okay, so the actionable trades. I will say, first of all, just disclosure, I am short GMT right now. Had not decided to short AVAX or anything. I think NEAR could be quite interesting because it's going to have a very, very many more tokens like released in the next foreseeable future. KNC is another one that I am short right now. But this is, this concept of VC unlocks and play to earn games going down in value has occurred before GMT. It's occurred with Axie Infinity. If you look at the supply schedule of Axie Infinity and actually the chart and how it's evolved throughout time, it was very similar to Steppen. Really had an explosive narrative, did multiples until it got to its ultimate peak, and then it's just been a slow bleed down 70 to 80% ever since, and we still have more supply to be unlocked on the open market in the next year or two. I think that GMT is following a very similar pattern right now and has another potentially 70 to 80% to go. My target in the short term is 50 cents, it's trading about $1 right now. So yeah, but I guess one thing that would be interesting would be at what point would you consider these trades to be wrong? Or when would the thesis be invalidated? I have an answer as well, but I'd like to hear yours.
Well, one thing that I think that we can look to historically as kind of a propellant out of the short thesis and kind of just a flip of the switch that made you have to switch from a bearish bias to a bullish bias was a short squeeze in Bitcoin. We saw that last summer in July of 2021. It really propelled us out of that bear market. That's something that could lead me to reshape my bias. But for the time being, looking at these supply schedules and looking at the lack of demand is really everything. So until we start to see positive price action in the equity market and just general increases in speculation and increases in interest and engagement, I don't think that I'm going to be flipping my bias anytime soon. So those are just a few things that I would have to see before I would change my perspective, but I'm curious to hear your thoughts on that as well.
I'd have to see a couple more articles published about Bitcoin being dead. That's usually a pretty decent tell, although it's happened quite a bit over the years. To me, it's not necessarily a price point, although we've talked a lot about how 18 to 22 seems like a nice interim low if we are to retest. To me, it's all about the Fed's actions and what happens fundamentally. If they decide to change their policy, do a more dovish stance, then it's time to close the shorts and look for a risk-on environment. But I'm not going to try to pretend I know what the Fed's going to do. I'm going to allow the market to tell me before really reacting. Because I think, and this is kind of a tangent, but one thing that I think younger traders, it took me a little while to know is you don't have to know where price is going to go, really. You just have to react to price. And that's exactly your point where you're talking about the short squeeze. If people get squeezed out of a short, you're probably going to see some continuation for the short term.
Yeah, you just got to trade what the market gives you. Now it's giving us a lot of negative variables that are driving price down. And it's not just crypto. Like we said, it's the macro environment right now with traditional equity markets getting hurt and with the Fed's decisions looming overhead. People are reluctant to put any speculative capital into this market. And until that changes, I'm going to remain bearish. So, those are just a few of the opportunities that you can take in this market. But really, I think that the key theme to take away here is that there is just as much opportunity to the downside as there is to the upside. And the willingness to embrace that is going to be one of the keys to surviving this market over the next 1 to 3 months. So those are my thoughts, CJ. Anything you want to add as we wrap things up here?
Yeah, I think this has been an awesome episode. It's good to have the actionable trade insights. I hope the audience has enjoyed it very much. The last thing that I wanted to talk about, and I was kind of hinting at this when we were talking about Axie, was Solana and what VCs have done in their DeFi ecosystem. So it's the same process where VCs come in, buy a lot of these tokens at a very reduced cost, and then ultimately they hedge with the perps. And if you look at Solana's DeFi ecosystem, specifically assets like Radium, Oxygen, Serum, they all have the exact same chart regardless of underlying market conditions. And it shows you how much sell pressure and how strong it's truly been. And I think it's sent back the Solana DeFi ecosystem 2 years, because retail's going to come in and they're going to see these projects and the chart is just down only, and they're going to think to themselves, is there something wrong with the project? So those are my thoughts in the short term, but overall, I think there's a really exciting 3 to 6 months coming up in the market, and it's going to be really interesting to watch prices and to watch the Fed's action as things unravel.
Yeah.
Any closing thoughts you have?
Just although the engagement in crypto might not be there right now, I still think the opportunity is there. You just got to look in the opposite direction. So, we highlighted a couple things to look for today. I think those will be some valuable tools over the next 1 to 3 months as this market kind of corrects and consolidates. But that's all I got. Thank you guys so much for watching. We'll see you on the next episode of the Crypto Byte. Happy trading and take care.